Alright, I'll ask the questions again. I want a yes if you absolutely made a concrete system with MACD. I want to know if you just flatly did not have the time. And a if you tried but found it hard and you weren't particularly happy with what you pulled out or what you created. Karen was camping up at the sunny Sunshine Coast. Very good. Hopefully you didn't get a massive dust storm across your tent. Jenny's didn't find it too hard but not completely happy with it yet. I've got some really interesting details to show you tonight, traders. I hope you enjoy it. Just little small details, but man, they're interesting, and it really does make an interesting point with your trading. Okay, good to hear from you all. I'm going to share with you my market move system as always. So normally it's a noise system, a market move system, or a monkey system. This week I'm presenting to you my market move system as food for thought. This is Euro to UK, a pure sell bias for longs, and I've got my MACD of fast 16, slow 14, smooth 9. The difference crossing the zero line, as you'll remember, was one approach I mentioned, and an 80 pip profit, 80 pip stop. For the dates mentioned, runs at 58% success, and you look at that and you'll go, rubbish, I'm not trading something that's 58% success. No, I don't expect you to, but when you see the profit line, you'll see it's very clean, apart from a particular patch. And for those of you who do want to use this system, your renovation work for this system is to just renovate that particular patch, and I can even show you it renovated as well. So I've said improve it before you use it, but it's pretty nice. What I'll do is I'll show you what it looks like, because there's a few key interesting points. So I have a pure sell bias. Now sell bias is 20 on the bottom, 50 in the middle, 100 on top, the three MAs. Then I have my MACD difference crossing from positive to negative, and then I go long up through here. Now, for those who are new and you're finding that you have no idea what I'm talking about, don't worry, it's a rotation of 12 lessons over 3 months. So what the other traders learnt last week, or were given for homework, and what makes total sense to them, will make total sense to you in 12 weeks' time, but you'll go away tonight with homework for next week. Okay, so you've slotted in, you work your way through 12 modular lessons, and at the end of that it all adds up. So you'll come in at the other end of this lesson. Okay, so you totally understand what I'm talking about. Now, there's a few interesting things about what I've taught here. The first interesting thing is, firstly, the settings of my MACD. You remember last week I said just use the standard settings where you can, but has anyone noticed something interesting about these settings? I'll go back up and see if I can give you another hint. Okay, what's interesting about my fast, my slow, and my smooth? Can anyone pick it? This will impact on the homework you have this coming week for the system you build this coming week. Okay, can anyone pick it? 3, 2, 1, nope. Look at my fast. It's slower than my slow, or put another way, my fast and slow are switched. So for a fast you'd want the smaller number, for a slow you'd want a larger number because it's looking at a larger period. I've sort of switched them around a bit. Why did I do that? I don't know. Okay, but what I do know is that they work, and they work very nicely. And that was just through, my process behind the scenes when I put together a system, and I found that it worked really nicely. So you might want to write them down or screenshot them, but a fast at 16, a slow at 14, and a smooth at 9. Now you might say, well, hold on, Greg, you said stick to the standard, and then you've gone and used a custom set here. That's true, yes I have. I could have built a system with the standard, and I encourage that. With the lesson I gave, what I didn't want is people going off and using wildly different settings, okay, completely different. These are quite similar to the standard, and there's a bit of thought into the way they were put together, so it's quite close to the mean. Okay. The next interesting thing is, okay, I'm going to go back to the standard setup. So here's a standard setup. What's the next thing that's completely back the front to what you would normally expect with that setup. What's completely wrong about it? There's something, or there's actually two things about this that are completely the opposite of anything you've been learning so far. Can anyone pick what it is? Okay, Jenny's got half of it. Oh, depending on how you want to measure it, but Jenny came close. And Adrian, well done. Jenny and Adrian, spot on. What we have here is we have all the reasons why the market should go short according to logical. So the moving averages, the fastest are pointing down, then the 50, then the 100, and that's all down. So you'd think, right, market's dropping. You have your MACD crossing and moving down. Every reason is absolutely to the short side. And what am I doing? I'm going long. And what did the market do? Where did it go? It went long. Okay, and isn't it interesting when you design a system sometimes, and for all the reasons it should drop away and it goes the other way. And if there's any market that I think can be given a caricature, it would be that the FX market would have the caricature of just when you think it's going one way, it will turn and go the other way, like doing a U-turn or turning on a dime. I'm sure some of you are quite used to that, especially if you try just trading it with no particular system, just watching it and see where it's going and picking where it's going next, and you'll find it always does the opposite to what you expect because it just turns on itself a lot. I'm going to show you some more examples of this now. So I'm actually going to bring up the live chart, and there's a method to my madness on why I did it like this. Okay, let's go have a look at a few. Here's one. Okay, so that was going along there. What I'm going to do is I'm going to scrunch my chart right up so you can see it. Not too much, but enough so you can probably see about 3 of them. Or even 2. I'll scrunch it right up. See how the market... Can you see what my system's doing now? It's getting me in on all the lows. So can you see every time the market sets itself up to drop, I'm entering in long, and I'm getting in right on the lows very nicely. And you can say, oh, well, Greg, that's a real nice approach. But when the market actually does go down seriously, for the long term, you're going to be cleaned up. And yes, and yes. Okay, here it got in slightly early, and it did exactly what could happen, which is stop me out. And then it went on and worked again. Now, another fascinating thing I want to show you. And I was talking about it before. Let me see if I can find something. Okay. All right, let's have a look at this. On the screen you can see 1, 2, 3, 4 winning trades and 1 losing one. The 4 winning ones all returned 80 pips each. Bang, bang, bang all the way through. Each one of all 4 winning trades was when the bias was pointing down, the MACD was pointing down, everything was south, bang, get in long, and away you go. And then I want to show you 2 times when, yeah, I do get 1, 2 stop outs in a row. Absolutely. Okay, what I'm going to do now is zoom in, and I'll show you the profit line too so you can see it in context of the last 2 years. But there's one more thing that's really cool. You'll notice in the free session I mentioned that these candles with a big wick at the top and then the market moving thereafter. To some they'd look at that and they'd say it's a shooting star or dragonfly or gravestone, therefore the market should go the other way. So they'd say, aha, I see it, I will now enter, because I'm clever, because I'm informed, because I have read a Japanese candlestick trading book, and I know what that means. So they would think, okay, I'm getting in on this candle here, and I know to trade it back down that way. This is how I now look at that candle. Whenever I see a candle like that and it moved away, the message it screams to me now is, okay, so no offense, but the amateurs and the intermediates saw that and thought, okay, I'd like to enter for a little bit, and that's very nice. But I see that now and I go, wow, that's telling me that a massive collective amount of trading plans of all different disciplines and types came to a point, and that point was that price level. So when it got up to that price level, they were all getting out. So some had different profit targets and everything like that, and they were all getting in different levels down below. But collectively, they all hit at that point and they were getting out. Now you'd say, how can that happen? I mean, you're just saying it. No, I'm not. what has happened is, remember I say, the market has times when it's moving and flowing and doing interesting things, but really it's just new ways of moving. And there's times when it's actually patterns that's repeating itself in the past, but not every pattern you see is one of those, but sometimes there's reliable patterns that are repeating themselves in the past. And the pattern isn't so much a price and indicators, but it's a market move you've identified with price and indicators. Well, the reason why they all come to a collective conclusion on these candles is because the different people with their different systems have all found the same market move. They've all found that there's times when there's nothing, and they've all found that there's times when there is something. And they've all found that it goes for about, from where they found it, they've found that it goes a certain distance. So someone might have found it when these two MAs cross, and from there it's 80 pips away. Someone else might have found it when the MACD difference crosses the 0, and from there it's 50. Right? And then the MACD crosses after, say, the MAs did, and so for them, their 50 and the other 80 actually conclude at the same point. And that's right there. So by knowing this, you can look at that, and you can go, I wonder if I build a system. Okay, this is the gold. Let me just find another example. Sorry, I get so excited about this. It's really cool. Let me tell you the finest point you can get out of this. I just want to find another example very quickly. Okay, there's one there. Well, there's two really. No, that's a classic there. That's what I want. Alright, this gets really fun. Okay. See that candle there, and you can see the big wick on the top of it, and the wick is really large. I mean, the size of that wick is the size of a standard candle. It's a really big deal. Well, if you build a system and you find quite often your profit target rests on a candle that looks like that, bingo, bam, you are on the money. Do you see what I mean? You are in sync, in zone with the market move. You are doing something right. Now, let me go show you. Here's one little example. Now, obviously not all of mine are hitting on that, so that it could be better. But when I see that this fella did, very nice. Okay, there's an example where all my requirements were there. It triggered, it got in, and it hit that. So it's like, aha, I'm working with a real market move, because you can build a trading system, but you're not sure, am I getting a real market move? Am I getting patterns that repeat themselves with an edge? Or am I just getting patterns that repeat themselves, but it's just market bubbling? Okay, big difference. I'm sure you're aware of it now. Okay, well, here is a key way to identify if you've done it. Because if your profit target candle on hourly is one of these ones with a big long wick, bam, you're doing something right. You're doing something really right. Very excited. Ecstatic. Now, this is what gets even more exciting. Let's say you build, like I was talking to one trader yesterday, and I said I have 17 trading plans at the moment. It changes weekly. You hear the number of trading plans I say I have, and you'll hear it change. Right now it's 17. And I have more than one on Euro GBP, I think. From memory, I'd have to go have a look. Hold on, I can tell you, not that it matters. Euro GBP, how many do I have on it? Anyway, it doesn't matter. There we go, 2. Yep, 2. Okay, so if I have 2 on it, and I find one that entered for who knows what reason, and it, say, came up and hit on that candle, and I have another one, and they're not going to trigger at the same times. Some weeks only one or the other will trigger, but sometimes there'll be a move, and they'll both trigger sort of within, 5 or 10 hours of each other, and they've got different size profit targets, but the profit targets conclude on the same candle, and it's a candle with a big long wick like that. Brilliant! Brilliant! That's the market saying, you know what, you're doing something really right. Now, if you're not sure what is and what is not a wick, if you're not sure exactly the type of candle I'm talking about, well, I'm going to go back to this example and take a screenshot of it. Your e-course tells you how to take a screenshot. That's an example right there. And you can see the effect of it. The market moves right away. Okay. And you should really bring up, there's a few key points about it. One is the size of the wick, of course, but then afterwards, the effect afterwards of the market just saying, that's it, I'm done, I'm moving on away. Bob says it was these jolly long wicks that cost him his 3 stop-outs out of his trades. Okay, now here's another one, and this absolutely counts. This is I'm moving back right now to real time, to current day. Okay, Check out that one there. Okay, that's exactly what I'm talking about as well. If you had a system that hit on that one, who totally understood what I meant and found that really insightful. Good. I just think it's so exciting. It's so spot on. It's really exciting, especially when you're putting a system together. Let's have a look a bit more about the particular systems that I was chatting with you with. Okay, that's my profit line. You can see that the trading plan was an altogether good idea through 2007 and 2008. It got a bit wobbly towards about October, November of 2008. You can see through really the first half of 2009, it was average and just sliding away, and that would be a time when you'd be asking yourself some hard questions. And then you can see it's since recovered and it's moving up strongly. Now, if you have a little think about big picture market bias, your answer to why that rough period through there will be answered, and how you can iron that out will be answered. These are the stats here. As I said, it's running at almost 60%, 58%. I could make it 60% if I wanted, but and 4 stop outs in a row. You'd want a maximum of 3 in a row. Another key thing, another key detail. When you put numerical values to these things, you want to look at what the average amount per trade you're making. So with this one, it's make or lose $80 a trade with $1 a pip. And a trading system I wrote today actually was 110 profit, 110 stop. And you can look at that and you can, or 110 profit, 80 stop, and you can think of it as, oh yay, I'm up $110. Oh, my next trade down $80. Oh yeah, I was up $110. And the next trade after that, I was down $80. But there's a smarter way to look at it. When you look at or put together your stats on how your trading plan has performed over the last 2.5 years, you can also see work out what the average amount per trade is. So with 110 pip profit, 80 pip stop, okay, so you're making $110 or you're losing $80. Well, you can say, that's nice, but I can see on average I was making about $30 a trade. So when you get a winning trade and it makes you $110, I would think to myself, if I was trading $1 a pip, I'd think to myself, yay, a $30 trade. And if it stopped out and I lost $80, I would think to myself, yay, a $30 trade. Because I know on average what it brings in. And when I build a system, more than the size of the profit and stop and the percent success, there's a detail that's way more key than those two. And that detail is what the average dollar amount is that's bringing in. Is it a $30 per trade, or is it $40 per trade? And you can have an 80 pip profit, 80 pip stop, so that equates to $80 made a loss with $1 a pip. But within that, you can have systems that are bringing, on average, $30 a trade, $40 a trade, $50 a trade, and that's the key detail you should be looking for, and that's how you should think about it. Now, with a spit and a polish, my profit line, I was able, because I like a certain shape to my profit line, I was able to lift it with a no-brainer, and you should be able to lift it to that without me telling you. And then you can see it just got a bit of chop through the middle there. Okay, and that's just a bias thing you have to think about a little bit as well. Okay, so that's a market move. It's been a while since I've shown you a market move system, but that's one there and it's a lot of fun. Your homework. Let me quickly give you your homework for next week so we're all clear on it. Your homework this week is a sandbox project. Basically means you have open free reign. And I will be doing the same thing. This is not because Greg is lazy, he's not using a particular or articulating a particular signal. It's because I want to make you think a bit. I want you in your drop-down box, so I'm going to just bring up a chart now and show what I want you to do. Up the top here, as you would know, and I want you to scroll down through your list, and you will notice probably 70% of them you've never heard of. And I want you to find one you've never heard of and build a trading system with it. But here's how I want you to do it. I want you to bring up, and this is the key, and this is the key lesson, right? Most people just start whacking on trading indicators and trying to build a plan, but that's completely the wrong way to do it. And even from our workshop, you should know this is the way to do it. I want you to find a key market move first, and 1, 2, or 3 of them. So something like on screen, see I've got the arrow, and I said that moved up, and then I said many different trading plans and types of different disciplines. There was a convolution of them, I think the word is, where they all come together. Many have come to the same thing at this point and caused that. Well, I want you to keep an eye on that first, Okay, so the market move itself first. So I want you to be spotting something like that and looking for something that'll lead up and take you out there. And I want you to find another one that's like a sell of that too, and so spot a few of those. So you might have an hourly of a particular FX chart. You've got your eye on those first. Then you know that's what you're trying to accommodate. Then what I want you to do is go through your indicator list, find a weird and wacky thing you don't even know what it is or ever heard of, apply it, and see if you can apply it and observe what it's doing and saying, right, I'm going to find how that wiggles or wobbles with that particular move, and then go back to the previous, really stunning market move you're looking for and seeing how it wiggles and wobbles with that, and see, yep, there's a clear defining method I can say when I see that. That's what I'm after. Okay, so is everyone clear with what their homework is? So I'm saying sandbox, pick something you've never seen before, something that's just like, what on earth is that? You'll actually have a bit of fun, but I'm saying it's not just a random project. It's a horse before the cart project, where you look for you put the market move on the screen first, and I've just told you about a particular key one with that type of candle. Now, it may not be based on the candle, but it'll be a particular up move or a particular down move. Then, when you're overlaying indicators you haven't heard of, you're interested in how they interpret that. Okay, brilliant. That's your homework. Now, let's move on a little more. I want to share with you now an email from one trader, which I really enjoyed. I said, hi, I hope you're enjoying the coaching. I know she had some questions we didn't get around to answering them, and I want to make sure at the end of your coaching you're 100% happy. Please tell me what they are. And the answer was, yep, 100% happy. My questions are, I'm not clear on how much I make or lose on AUD USD. And secondly, what I like to do is have a swing trade going for the long term, and then a day trade as well. Is this feasible, or should I concentrate on one? So each week, traders, I'm going to very quickly talk about an email that I think could be in a question in many people's minds, and share it with you all so everyone benefits. Okay, so that's one of the penalties of sending me an email, is you might have me discuss a little. So this trader is saying, can I do long-term and short-term trading at the same time? And I think some of you would know what I'd say about that. Put a yes if you think I would say it's a good idea to trade a long and a short term at the same time. And put a no if you think I would say, no, it's not a good idea. Because I'm interested to see if I send a mixed message or if I make it clear. In the first part of the email, I said, on AUD USD, start with a mini account, which is $1 a pip. The fourth module in your e-course explains it in detail. Okay, so I've gone through that. What I'm more interested in covering is this second one. Your question about trading one trading system or two, without a doubt, trade them both. I currently trade 17 of them. So of course I'm going to say trade more than one. I think it is completely ridiculous, right, that trading companies would say, one method and build a trading plan. Help us. That's a disaster. Let me explain why. Now, I'm saying, first of all, I can see the logic behind why you could say focus on one, is because it's getting all your focus and all your attention, so you're going to do it well, rather than trying to multitask. Okay, well, to answer the question, I want to draw your attention to an article I wrote. I wrote an article saying, creating the plan is an art. It's a creative thing. Yeah, but executing it flawlessly is a science. The actual trading of the plan. Now, sometimes you can get very frustrated with your artwork, i.e. creating a new plan. Sometimes it can be very frustrating. Who finds it frustrating? Do you find it frustrating sometimes creating a new plan? It's creative, it's wacky, you got to think of something bizarre, but it can be infuriating sometimes. Yeah. Okay, and the more paint you apply, the uglier the painting looks. So I say, it's refreshing to have many canvases. I might be working on a particular trading plan, and I might be just getting really annoyed with it. So I just write it down, MACD, Euro USD, this is what I'm up to with profits and stops. I just can't make it better. It's okay, but it's running at 55% success. I like it, but I just can't, for some reason, weed out the massive stretch of stop outs it sometimes has. Okay, put that aside. Now I'm going to go work on a different one. And so, yeah, you might have one particular painting you're not happy with, but hopefully your other paintings are looking better. So yeah, it comes back to what I was saying about layering. But this point here has nothing to do with layering. This point is more if you're building a trading plan and you're a bit frustrated with it and you've got a few, it's a great benefit because you can keep your enthusiasm up. Okay, remember you need to operate essentially on passion with this and be very proud of the work you're creating. Okay. Now, secondly, this particular trader was talking about two trading plans, but also a long-term and a short-term one. And I can't say enough about how that's a good idea because it helps you understand the full view of what the market's doing. Okay, your thoughts from one will support the other. I can't say enough the importance of more than one trading plan. It's a great idea. There is more than enough time in the day to give full attention to each one of them. It certainly doesn't take away from any of them. KB says, I have a huge folder full of plans that don't work well. Guess what? So do I. I've got Greg's trading plan bin. It's actually called that. It's a folder, and it's all my plans that were sort of good but not good enough, and it goes in there. And sometimes it's helpful just to not completely throw them out, but to keep them like that, so you don't go in circles and try to build a plan on something you've already gone and exhausted the idea with. Okay, I hope that helped. Normally I would get someone on the mic, but I think it's a bit late this week, but next week I will, because it's helpful to everyone to hear from a trader. So please make sure next week, everyone, you have your microphones, and I will be asking questions like, I shouldn't really tell you because I don't want you to be able to prepare. I just want it to be spontaneous. But questions like, what has been your biggest struggle? And what has been your biggest breakthrough, light bulb turning on experience through your trading? Okay, something like that. And I'll try and keep it short and sharp. So I'm just going to leave you with a quick question before I hand over to Brendan, which is if USD Japan is currently a short bias, and I've got September 09 just so if you take a screenshot you know what I was talking about at the time. What type of bias does Euro GBP have? Can anyone tell me? That's your homework question. But if you link it back to the system I was talking about earlier, okay, and the sort of approach I was taking, you'll connect the two and go, interesting. Okay, so food for thought. Well, thank you traders. It was lovely sharing with you again. I hope you're enjoying your trading. It was lovely to see you all in the room. I hope you have a good week. I'll talk to you next week. Thanks, traders.